morning everyone, and welcome to another Morning Markets here at True Potential. Now, Friday was a disappointing day for equities, led by the US, which was particularly weak through the afternoon and into the post-European session, and that dragged global indices down across the day. The reason for poor performance is down to one factor, and that is inflation. As my colleague Jeff Casson discussed on Friday's episode, markets were expecting inflation to remain steady. There was even some hope of a modest decline from the April print. However, inflation surprised to the upside, printing 8.6% on the headline CPI measure. Why is this a problem? Well, inflation didn't just increase, it increased to a new high in this cycle. It's also the highest reading we've had since the early 1980s. And this is the real challenge for monetary policymakers in the US when they meet later this week. Now, whilst a less volatile measure of inflation, which was published at the same time, came out at only 6%, the underlying measures within that are a challenge for policymakers. Food inflation in the US is now above 10%, and a measure of housing costs, owner equivalent rents, is rising around about 6%. This is a more sticky measure of inflation. It typically rises when there are broadening price pressures, and it can be very difficult to cool or bring down this measure. So this reinforces the challenge that policymakers will face on Wednesday when they meet in the US. Now, the market was expecting an increase in the US interest rates of 0.5 percentage points on Wednesday evening. That would take the policy rate to 1.5%. But what we may find following this CPI print is that policymakers will either surprise the market by increasing the policy rate by 0.75 percentage points, or indicating with some firm language that they are likely to speed up the pace of increases as we go through the summer. Now, markets are already ahead of this. They have increased their expectations for policy rates by the end of the year in the US to above 3%. Remember, we're at 1% right now. We're expecting to go to 1.5% on Wednesday. So that means policymakers will probably only be about halfway in this year's tightening cycle by the end of the week in the US, and that is a challenge. Now, in other data which was published in the US, I'm afraid there were no bright spots there either. Measures of US consumer confidence have fallen to a record low, and this shows that households in the US are reacting both to rising inflation but also rising interest rates, and there is some signs of belt tightening in terms of spending, and this will soon feed directly into US growth. Now, closer to home, GDP data in the UK for the month of April was just published, and it showed a surprising decline. That is, levels of activity actually fell through the month of April. And this coincides with it being the first month in which the energy price cap was raised in the UK. So it's likely that consumers are already reacting to rising prices, and in fact, the UK hasn't recorded any growth in GDP since the January sales ended. We've had a flat month of growth in February, and we've now had 2 consecutive months of modest declines in GDP. And this is again a challenge for the Bank of England, who meet on Thursday. Markets are expecting an increase in interest rates of 0.25 percentage points. But with inflation likely to rise above 10% as we go through the summer and into the autumn, and GDP now showing it's very flat and perhaps likely to continue declining to the summer, there's a very difficult communication challenge for policymakers to try and guide markets to where they think interest rates will likely end up as we go into next year. So that's all for today. Please join us through the week as colleagues will update you on these very important meetings, both in the US and in the UK. Thank you.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.